You guys ready?
Yeah.
All right.
Sender.
We are live. Okay, hello everyone. Hi. Okay, so for everyone on TikTok right now, I'm here with Gary and Clark from the team. You can't really see them because of the camera angle, but if you got any questions for them, they're here. And for everyone on Facebook and YouTube, we got you up there. So realtors on the Win City team, we got some real estate investors here. So any real estate questions, put them up. We're from Windsor, Ontario, Canada. So any questions you got here, feel free to ask. If you guys want to introduce yourself, give a little.
Yeah. Let's go ahead. Me and Melina was here last week, taking her for Aditya. Aditya is still not in Canada at the moment, so we're taking over as much as we can here. My name is Clark Alley. Like Melina said, I'm a realtor, real estate investor on the team, and I guess tiny home guy is also my other subtitle. Asterisk next to my name,
Gary Gill, new part of the Windsor real estate team, and yeah, excited to be here. Let's do this.
Let's do this. All right.
Awesome. Yeah. No. So we're pumped. I think today, we mentioned we'd talk a little bit about the interest rates and kind of how that affects, or I guess our opinion on how that affects the real estate market. Absolutely. And kind of what we kind of look for in 2022.
Yes.
Spoke with a few mortgage agents, got their opinion. Now we'll kind of provide their opinion with our opinion and kind of dive right into it.
Right.
And we are always fielding questions as well. So TikTok, you guys can hear me,
right.
As well as Facebook and YouTube. Bring them in, and we're happy to answer anything you guys have for us today.
All right. Hello, everyone. Okay, so there's some more people starting to join in on TikTok here. Hello, Urban and you. Thank you for joining. If you guys have any real estate questions, real estate related questions, feel free to ask. I'm here with a couple other people from the team, Clark and Gary. So keep those questions rolling in. It might take about 15 minutes for us to get up there. So let's start though, because I had some questions on my story on Instagram recently.
Okay.
From Is Dimitri, who follows me on Instagram, he asks us, what do you think will happen to the housing market next year throughout Ontario? So who wants to give some thoughts on that first?
Yeah, I guess I'll kind of take a stab at it. Okay. The one thing that I kind of find interesting is that in December, historically, the market slows down. People don't like going outside when it's snowing to go look at a bunch of houses on the weekend. Right. People that need a house, need to get a different situation. Investors that are looking for deals, they'll still get out there. But historically, on an average, 20-year basis, it is a bit slower. However, this month, I'm still noticing multiple offers. We're still noticing, prices go multiple over asking, multiple offers. I was participating in a bid today, 8 offers on a student rental.
Literally 5 minutes before we start. Actually, you had 2 minutes to spare to put in that offer before the live. So he was literally writing it before we got onto this live. So still crazy, right?
Still tons of offers out there. So if that, because it kind of leads right into, I guess, our interest rate discussion, is that, theoretically, higher interest rates brings lower prices. However, realistically, we're still noticing a ton of demand hit these properties, hit this market. So it'll be really interesting to kind of see what happens. Theoretically, higher interest rates, lower prices. Realistically, supply and demand issue. I think it's still out there, still strong. So that's kind of my opinion. Is it'll still, theoretically it should go down, but realistically, I think it's still going to rise.
Right. Do you have any thoughts on that as well, Gary?
Well, the interest rates, they're not going to go up like right away, right? Like it's going to be like 0.25 at a point, like, quarterly kind of thing.
Right.
So like, you're right. Like it's not just good. They're going to go up slowly, but they're not going to go up that fast. It's just going to affect the housing price like right after, right? So I think it's going to keep on going the way it's going. Last year.
There's a funny point you mentioned how interest rates usually kind of rise every quarter. Mm-hmm. I was talking to a mortgage agent, and they kind of get updates from the central banks like way faster than we do. Kind of like as realtors get updates, from CREB, from Toronto Real Estate Board, or listings even before other people do. Mortgage agents get the same thing, but for interest rates and mortgage offerings. Right. So the mortgage agent I was kind of talking with is that he kind of foresees it actually the interest rates rising just because they were so low, and the housing crisis is so steady that the Fed and government's like, okay, how do we combat this?
Right.
So he seems to think that instead of going every quarter, that we might see it even monthly, even 2 to 3 weeks at a time. It might go like a little bit increment, but not quarterly, even sooner than that.
Okay.
So it'd be really interesting to see if that is in place.
How much do you think it's gonna go, like 0.25? Like, because like normally in 08 that's what they did, like 0.25 every quarter,
Yeah.
because they don't want to rush back into that, right? Because it's gonna collapse again, right? So how much did he say?
Okay, yeah. So I didn't follow it exactly, but in 08 it was like 0.25 every quarter is what they did.
Yeah.
Okay, interesting. So
when they started to recover slowly, it was 0.25. At first, they lowered it down, and then 0.25. Just when they were stable, that's when
Yeah. So it'll be interesting if they go faster than that.
It would be, because I felt like it would be rushing it a little bit.
Yeah,
Because,
that's what I thought.
There's a new virus, what's it called? Omicron? Is that what it's called now?
I've lost count.
There's 17 of them now. So so that one's happening. More COVID cases that are rising up, and you guys are talking about raising interest rates per month. I think that's a little.
That's what he was speculating. That's what he was
Right,
speculating. I thought it was a little crazy myself, but he seemed confident when he was speculating that.
Right.
Okay.
So for there's some people joining in, new people. Hi, Todd. Thank you for joining the live. Right now we're talking about interest rates and how them rising is going to affect the market. If it's going to rise, how fast they're going to rise. If you guys have any questions related to the Canada or Ontario real estate market, feel free to ask here. As for my thoughts on whether there's going to be a housing crash because of the interest rates, I think obviously, like you said, theoretically, interest rates go up, the demand goes down, but we're also seeing a bunch of people coming in as well. So there's still a supply issue in Ontario. We're not keeping up with demand for that. We're getting 400,000 new immigrants every single year for the next 3 years in Canada, and a lot are coming to Ontario. So I think there's a lot of other factors to consider aside from the interest rate on top of that. And then even for people that are looking to who are waiting for that crash, right? There's people that are waiting for the crash and they're waiting for the interest rate.
Yeah.
And I'm do you have $600,000 in cash right now to buy a house if it crashes? You know what I mean? So it's you're going to be paying that higher price as well. The numbers are going to work out to the same. So it's I can definitely see how there's a lot of factors affecting it, and we really don't know where it's going to go. And then we got that new virus coming out. So it's what is going to happen at this point?
Going back to the interest rate discussion for a second. Another thing that that mortgage agent brought up that I thought was an interesting take was that he's seeing commercial interest rates actually as a point, residential interest rates were as low as they could be. I think you mentioned, you got something 1.5, 1.6.
1.7 actually. Yeah.
1.7. Yeah. Still historically low.
Right.
But so I think he was mentioning that, commercial interest rates are kind of around the mid twos. So for certain people that are looking at, triplexes, fourplexes, he's actually suggesting commercial interest rates because at some points it's actually lower than if they were to go for a residential rate, just based on their credit history, based on the properties they own, and kind of everything else.
Seriously.
So he was, because I had a client that was looking at a triplex in Essex. And he showed me both rates. He said, Clark, do I get a commercial mortgage here? Is it actually make more sense? And, I was like, well, if you have the down payment, sure, go after that, get the lowest rate. But residential, you're still always going to have the lowest percent down.
Right.
So cash on cash return, you're going to just get better off a residential loan. But if you have the cash sitting there and looking at bigger purchases, office buildings, retail, and you want to figure out that space, I think now is, a great time. I think commercial properties are heavily discounted. Every single commercial property that trades, I think it's just a great deal. Plus interest rates at all-time low. I think it's interesting kind of that aspect of the world as well.
Right. Yeah. See, when I was looking into a commercial loan, this was a few years ago when I was looking at the sixplex, we were able to get a residential somehow. I don't know how. The mortgage broker pulled some.
They still exist.
Yeah.
Desjardins and RBC, they still they still toss out six unit mortgage residential. But
Yeah. I think they were one of the old. I was surprised because I was expecting like a commercial loan, right? And then for that, you were looking at like 25% down. And at the time, the interest rates were a lot higher from what I remember.
Yeah.
So I think like I thought I remembered it being like 5% or something. Like
I was
going to
say like 4 to 5. I could have sworn.
Yeah. And I was honestly unaware that commercial interest rates were like at 2.5% right now, which is crazy.
Yeah, it was like mid to high 2s, something like that.
And you're saying like you're seeing discounts in commercial real estate as well. So it's like, are you seeing the discounts still, even though like the interest rates are low on the commercial end here, like for the purchase price?
At least in Windsor, I'm not sure about like GTA markets. People might know better, like way better than I do.
Yeah.
But I think tertiary, kind of like how tertiary multifamily used to be like a hidden secret for the past until the past 4 or 5 years, really. And then it's like, oh, Chatham, we got to invest there. Like 4 years ago, it's like, wait, where's Chatham? So, kind of like tertiary markets, multifamily just kind of shot on the rise. Personally, I still think just commercial assets in tertiary markets, people haven't hit those yet. That's why they're still selling at a discount.
Gotcha.
But GTA markets, I think people probably caught on with the interest rate to the purchase price there.
Yeah, people are starting to catch on. It's word of mouth, isn't it? Like people start to see what's working, and then it doesn't work anymore once too many people get into it. Yeah. So we're getting some people joining. Hi, Nav. Thank you for joining the live. Is anybody here from Canada or Ontario, or were you here on the last live? If you have any real estate questions, make sure to put them in the comments here. We're going to answer all questions that come in. Let me take a look at what we got on YouTube here. So Aman Binning says that mortgage brokers pulling strings seems to be a reoccurring theme. I mean, it's, I don't know what she did. I can't say like she pulled strings. I'm sure it was legal what she did, but it's beneficial on your end if they can pull it for you, right? So but that's I could definitely see that.
On that note, I'm sure like you get it as well. I remember we were talking about this sometime where clients come to you and they say like, hey, I make this much amount, I got pre-approved for this much, but my friend, we kind of make the same amount, but he got approved for this much. Like, can you help me out? Can you help me get that? I'm like, no, like I can't. Like,
I'm not a mortgage broker.
There's a formula, there's a black box. You do all your inputs in there, and it spits out what you're pre-approved for and the relative interest rate.
Right.
Now that black box, I don't have access to. Is there some mortgage agents that can change that? Yes. Do I work with them? No. There is some. They are out there. They will perform that for you. I hear a lot of that happen here on the GTA. Unfortunately, I'm just not the one to work with that, but they are out there. I just don't partake.
Gotcha. I don't think mine did anything illegal. Like she was with RBC, and like I think it's a legit place to be.
RBC and Desjardins will do 6 units residential. I recently just sold a 6-plex where he got. Funny enough, actually, he got a residential mortgage on a 6-plex and low insurance, and it was full knob and tube.
Oh, how did he get low insurance on that? Like
that's what I was surprised by. So TD, apparently TD insurance. I didn't even know they offered insurance to begin with. And then I found out they did offer insurance, and not even offer insurance on a knob and tube 6-plex with a residential mortgage on that as well. So that was like pulling the strings of legal insurance that I saw. But it was TD. Like it was like the most trustworthy thing out there.
Yeah.
So it was super, super interesting to see that.
See, for TD, I went to them first to try to get a mortgage, and they gave me like a crap rate, and like they
TD's awful,
yeah. So like I'm surprised to hear they did that. But okay, we got some questions coming in from TikTok now. Hi, Nav. We got Mr. Patel here from Guelph. Thank you for joining us. You're welcome, Nav. Thank you for watching my videos. Okay, so questions from Shields. What do you think is the best motivator while doing your course for real estate? Motivator. I think we could probably, me and Gary can speak on this. So my motivator. Well,
what gets you pumped? What gets you pumped?
I know. What gets me pumped in the morning, aside from caffeine?
I think that's it. I think
that's
you just listed
That's
it.
pretty much
I think
it.
you listed it.
But I mean, like, I know, like, the two things that keep me motivated is joining the Win City team. Like I got a good team over here, right here, Gary and Clark, right? So I'm excited to work with them. So that's one thing. The other thing that is really like putting the fire to my butt right now is that there's clients contacting me that want to list, like
There you
to
go.
like buy with me, right? So because of the social media, so like I have people waiting for me to get my realtor license, and I'm probably going to give them to you guys if I can't get it on time. But yeah, so that's my primary motivator. I mean, if you're talking about real estate, I just love real estate. I find it very interesting. I think it's a great way to build wealth. But yeah, I hope that answers your question, Shields. Okay, let's see. So do you have any thoughts on that, Gary? Like what gets you up in the morning?
Yeah, for me, it was mostly, first of all, I had the time, like I did the whole course, like during like the main COVID break that was going on. So I had the time. So it was, for me, it was like, okay, I got to learn a new skill, like got to learn something new. And I got super into real estate. Like I was already looking at listings and stuff, but I couldn't buy it. But then obviously like comes back to the Wind City real estate team. I started watching Aditya's videos. That got me excited, and honestly, that's what was waking me up. Like every morning, I would wake up and I was like, all right, dude, I just gotta do. Like I would, believe it or not, I would study for like 7 to 8 hours a day, and it wouldn't be studying. Don't get me wrong, I'd just read it, like multiple choice questions and stuff like that. But I was invested in it, and like I was able to get it done like 3 to 4 months. But
Yeah,
like
that's good.
that was pretty much it.
I feel the same way too. Like I couldn't study like as long in nursing as I did in real estate. Like the realtor courses actually, like I'm very intrigued by it. Like I could study 5 hours.
And I was watching these guys' videos too, like along the way too. So it was like it was the same thing. Like I want to join these guys.
Right.
Like I want to pull the leads too. Like yeah, it was fun. It was fun for sure.
Absolutely. I agree. I hope that answers your question there, Shields. So we got a few more questions on TikTok here. I'll get to you guys in a minute. I'm going to get to the questions on YouTube here. So from Alap Shah, we got any potential for an investor looking into a newer semi-detached duplex houses at this time when the housing market has turned insane. I am not looking for a family rental. Looking for a family rental, not the student rentals. Okay, so he is looking for family rentals. He's basically asking like, what is the potential for the housing market here for duplexes, detached, like for a family rental? So do you want to go on this subject?
Yeah, sure. So is the question just regarding a duplex in general?
Yeah, it looks like he wants to buy a duplex or a single family home here to rent out.
Yeah, so I think, speaking to my property manager, I try to touch base with her. I end up talking to her probably once a day. But speaking with her, she comes back to me. She says, Clark, single families and 3 bedrooms and 1 bedroom units fly off the shelf. I think during COVID, she found that people that have like 2 bedroom units or living in apartment buildings, they just want to get out. They want to have their own space. They want to have their own yard. They want to have their own privacy.
Right.
COVID kind of trapped you in a box with people in boxes beside you too often. That she found, single family homes, like 3-4 bedroom units, they rent really well. Albeit they're more costly to get involved in those things. But yeah, she found those just fly off the shelves. The newer the better, just because, a good example, one of my clients, he rented out a single family home in Walkerville for about $2,200, $2,100.
Nice.
Which I thought was, like a great rent. I was like, wow, surprised. And he said that he was picking between 2 candidates for a single family home rental. One was a dentist with a part-time wife, I forget where she worked. And the other one was just like engineering, like recent graduates that have like, first-time engineering jobs.
Right.
So you would think a group of engineers or a dentist would be able to go and get this luxury home, but just starting out, it's kind of tough. Maybe you had bad credit, maybe you had kind of bad history, didn't have the time saved up.
Right.
So you get just great tenants for these properties.
Right.
But only single family homes. They realize they have enough money to get what they want.
Yeah.
I think they fly off the shelf and get great tenants for single family homes.
I agree. If I can give some thoughts on this too, I actually recently bought a single family home for myself, but I may or may not rent it out one day. But the reason I bought the single family home is so I can build a basement unit and a tiny home in the back. So I'm essentially turning it into a triplex, and Clark is like the expert in this for the tiny homes, like expert. And I'm sure you could give some thoughts on this later. But so when I was looking at single family homes as an investment, I found that in Windsor, you often break even, which isn't bad. You know, you're still building equity, but you're breaking even. Like that $2,200 a month in Walkerville, you're looking at maybe a $1,900 to $2,000 a month rent, and then add in all the other expenses, right? Or mortgage, to $1,900 to $2,000 mortgage. So for the potential to turn a single family home into a duplex or a triplex, your ROI just like shoots up. You're looking at very good cash flow if you add another unit into a single family home. And again, you do, like, we got good tenants here in Windsor, right? Especially if you're in a nice area, you got a single family home in a good area and you build, 2 units in it. Like I'm near the hospital over here, right? So I'm looking at like getting nurses into my rental here. So, I mean, nurses are the best tenants, by the way, and not to be biased, non-biased,
yes.
right?
Okay.
But so there is really good potential in single family homes if you plan on adding a unit to it, if you want good cash flow from it. Otherwise, I think you're looking at more breaking even. So I hope that answers your question, Alapsha. There's definitely like still potential here for that, but you definitely have to find some value add, right? So
on top of that, there's this one quote actually from a local really known real estate investor, Dan Crosby. He has this one quote that really kind of stuck with me. Now I offer this advice to other people: is buy a property that makes sense now, and you can add value add in the future. Right. So, like you said, basement unit, tiny home. So if you can buy a single family, that the numbers work as a single family, and let's say the tenants leave in 2 to 3 years, the market is even more insane, and you can't, buy another house. Right. But you can add value to the house you currently have. Right. So now you go back to this single family house you bought 2 years ago, then you dump the money into the basement and then refi that, or you build a tiny home and refi that. But you don't buy, the single family home. Like, oh, sweet, it just breaks even now. Break even now plus potential value add both ways in the future. Right. I think is what I push my clients to a bit more if we are looking at single family homes, because you're right, it is good value add. Right. You don't have to do it right now. You can do it 2 to 3, 4 years from now. Right. But as long as it's there, you'll make money on the buy, make money when you sell it, because someone else will see that as well. Absolutely. I 100% agree with that. Do you have any thoughts on it, Gary? Before
I agree. Okay. That's actually true.
Perfect. Yeah, I think we covered.
I mean, if you're gonna spend that much, like most of the single family homes, like for example, like South Windsor, like because those homes actually have like the basement potential. Yeah. Right. Like most of them have the proper height, which is 6'8" and like 6'3" in the drops. Like, but anyways, those are the actual homes that actually have that. So the South Windsor homes, like 5'2", like even up to like 700K. Now I was actually doing some comparables, like for a lady today. Like she's like, oh, the listing price is I think it's $450. We did the comparables, like it's easily going for like around 700. She's like, that's $250 over asking. I was like, yeah, it will very easily. So yeah, no, I agree. And they have big South Windsor has big lots too, right? So exactly. So that's a tiny home potential. That's where like I've actually been looking. So once people like ask me like a potential ADU, like South Windsor. Like, you got the basement and you got sometimes it's even a detached garage too, right? Mm-hmm. That's even better. Like gold mine right there. Yeah. So yeah, no, I agree. Yeah, you mentioned the detached garage. One of the best deals I think I got in South Windsor. I think it was the second or third when I was running the comps, like lowest selling property in South Windsor, and it had the proper basement height, and also had a detached double car, like wide double car block garage. So she could easily toss an ADU in there and ADU in the basement. Mm-hmm. So yeah, that works. That's what I kind of look for nowadays. Like just that detached garage helps a lot. Like saves them some money, and like it's got to be a good foundation though. Like if you have a stick frame garage, you might as well knock it down and build a new one. Yeah. It's got to be that like block. You walk in there, it's like, can this like survive a tornado? It feels like sometimes. Yeah. Those ones are good. I know I gotta tear mine down like when I do the time. I'm sure you've seen it, like that little rinky-dink garage in the back there. But yeah, that's okay. Very good insight, guys. Yeah, South Windsor is absolutely great for that, and it's a good area too. So good tenants as well. Yeah. Okay, so let's see. So we got more questions coming in. So from YouTube, Hafsa Osman says, since you mentioned TD wasn't the best way to go for a mortgage, any advice on how to get a mortgage in the best interest rate? That is a really good question. I would suggest 2 things. So first one, compare, like go to multiple mortgage brokers. And the second one, or maybe
you might want to do this one first, get a referral from somebody who's done it. Yeah, so like I went to multiple mortgage brokers, and then Aditya referred Susan from RBC to me, and she's the one who gave me the best rate, and he's the one who told me, yeah, they can do the 6-plex residential thing, right?
Mhm.
So yeah, get a referral from somebody like who's done it before, and you know, if you can't get that, compare, right? So do you have any advice?
Yeah, I would say starting out, definitely talk to a mortgage broker. Once you're more advanced, you know, one of my clients, he has like relationship with RBC for certain type of properties in Windsor. He has relationship for someone else for certain type of properties close to the GTA. I think once you get to like a medium to high level in real estate, you kind of start having specific contacts at banks that can push stuff that just a mortgage broker can't. But starting out, your first few properties, your first couple of years in real estate, I talk to a mortgage broker. They would, you know, spend the time with you. They would teach you, and they shop you to, you know, everyone out there because they've been around the block.
Right.
You want someone that's been around the block and can provide you a bunch of options, not someone that works at TD that can only provide you TD options.
Right.
Because at the beginning, there's a lot of options you should look at. Once you're advanced, you got relationships, you can push strings.
Right.
But at the beginning, you don't. So talk to someone that can.
Absolutely. I definitely agree with that. Yeah, TD was my first one. I don't recommend. Yeah, no, for investors at least. Yeah. Don't come for me, TD, please. You got any thoughts, Gary?
Yeah, just don't give up on the first guy. Obviously, like TD, like you said, like people have always had their like bad experiences. Me and you were just talking about a deal that I'm in earlier. The first guy, like, it's probably not going to work out. Like, we're just going to go to a different guy, and that guy, like, you know, just compare rates, compare the different kind of people that you go to. Like, normally, everybody's going to vary. Everybody's going to be a little different. So, yeah, just do your research, and you should be good. Absolutely.
Very good input, guys. I love it. Okay, we got a lot of questions we got to catch up on now.
All right. Rapid fire.
So we're going to go, I'm going to see what we got on TikTok here because I missed a lot. Oh my gosh. Hello, everyone.
Just typing up a note.
Okay. Let me just pick a question here. Okay, so Jorthan here says, if I get a secure line of credit to use the lower interest rate, can you write off that line of credit after you pay it off? Equity to buy again. I'm just curious if it's smart to use that. Got rid of it after so I can, I'm not quite sure like what you're asking there. If you can rephrase the question, like, are you asking if you can use a secure line of credit to buy a property? If so, there is like the BURR strategy, but that's refinancing, not really lines of credit there. I hope that kind of answers it. So Jim and Rain says they are in Bell River. Hello. Thank you for following. So really enjoy your vids. Would love to have you talk to my 19-year-old who will listen to you. Well, thank you. I appreciate it. Yeah, he can message me. I'll give him some real
Melina is actually now taking consulting options. You can reach her.
I know, totally. Send my way. Okay, so Steve Bach says, looking to buy multi-res in Windsor. How do you see rents in Windsor? That's a great question. So obviously the rental market, I hope you're still here, Steve. Sorry for getting a little late. But obviously the rental market in Windsor is just as crazy as the buying market, right? So like for my last unit, I had over 100 applicants on my rental, over 100. And
insane.
I had a pre-screening for it. Okay. So I literally had people do like a pre-screening forum and I still got over 100 people on this. So yeah, there's definitely a lot of tenants. There's a very low supply of good rentals right now. Mm-hmm. And yeah, I don't think you have to worry about rents in Windsor, to be honest, or finding tenants, because I get that question a lot about like, what if I buy a property and I can't get a tenant? I'm like, that's not even a concern at this point. Like, I think vacancy rates are at like 1% right now. It's insane.
Yeah, the one thing I would comment on is my one client, I think he has about 50, 60 units, somewhere in there. And he mentioned when we go offer on properties, his biggest thing is, Clark, you need to show proof of rent.
Right.
That condition is very hard to put in an offer, I'm sure, as you guys know.
Mhm.
But he's like, Clark, I have to have it in there. So I'm like, all right, it'll limit our properties we look at, but that is just something he needs.
Yeah.
Eventually we landed an offer, get the proof of rent. It shows they're behind on a few days. So we, inquired about that. But he told me that, out of his 50 to 60 units, he actually has 2 tenants that have stopped paying for 6 to 8 months now. He's gone to the landlord and tenant board. He's filed the applications. He's going through the process.
Mhm.
But at the end of the day, landlord and tenant board is backed up by like 4 or 5 months.
Yeah.
I've heard some people, wait a year before going through the process. So
Right.
it's, that is a cautionary thing. I think finding people, like you said, just slew of demand out there.
Yeah.
But that caution of, tenants not paying rent, having to go through landlord and tenant board, doing that whole process, keep that in the back of your mind. It is probably a 1 in 100 opportunity or 1 in 100 chance.
Mhm.
It just stuck out because he has like 56 units and it happened twice.
Yeah.
So
yeah.
his stuck out to me, but it's definitely happens.
A possibility. Yeah, that's a really good point you mentioned, because there is definitely the possibility of somebody not paying rent or something going wrong. But that's why it's super important to do the screening, or like if you're using a property management company to do the screening for you, make sure what kind of process they're going through as well, or find a good property management company that you trust. So that's a great question, Steve. I hope that kind of answers it. And let me see what else we got here. Let's answer from YouTube now. From Vamsi Karapati. I live in Toronto. Do you guys think it's better to wait? I haven't bought my first home yet, and I can't go higher than $750,000. So Toronto, that's going to be hard. I know that. If you can comment down below, are you planning on coming to Windsor? And in the meantime, we'll kind of answer this question from like a Windsor perspective. So do you guys think it's better to wait to buy a house, or like what's your opinion on that?
Gary, do you want to take that one?
Honestly, best time to buy is now. That's what you always tell all your clients anyways. Like with the interest rates and all I still think they're not going to go monthly, because you're just waiting for something bad to happen. That's just too much, especially with the whole virus thing going on. So the interest rates, they're not going to jack the prices like lower or anything in the next year, in my opinion.
Right.
So in my opinion, like the best time to buy real estate is now. It always is. Like even like if the market goes down a little bit, even then it would be the best time, because at the end of the day, everything is going to go like recover itself, and it's just going to go even better after that.
Yeah.
So that's what I would have to say about that.
Mm-hmm.
Yeah.
No, I would, like you said, best time is now. The other thing I would mention on top of that is that there's always a deal. In crazy hot market, I feel like I've swung on a couple crazy deals this year that I'm surprised that even got that deal. But you have to put in the effort. The unfortunate thing, it's not like back then where you can toss an offer and kind of negotiate with the seller. You got to find like a specific situation why this property is going to sell less than the neighbors around it. Are you willing to take on a little bit of headache for that reason, and then push yourself to find it? It's it's definitely tougher, but if you're willing to put in the effort, it's there.
I kind of got a similar situation here. So I got this house for a pretty good deal, because if this were my realtor, I would have been so mad. But okay, so there was 2 houses for sale, right? This one and then one like a block down. And they're almost similar, except the other one had like renovated kitchen, it was super nice and all that. So of course it's going to attract more buyers. They had the offer dates on the same day, like this house and that house. So because of that house got over 20 offers, and this one only had 4.
You gotta shoot for one.
Yeah. So I shot. Yeah, exactly. You gotta shoot for one. If my realtor did that, I would have been so mad. You should know that. But anyways, like we got this house for a pretty good deal compared to the other one, and we renovated the kitchen for like $5,000, and it's nice now.
Yeah.
But so again, like you mentioned, finding specific situations, right? And finding the good deals. Like I was willing to renovate the kitchen, and a lot of people weren't willing to do that. It's not the main reason I bought it. I bought it because of the ADU potential, but like you guys know what I mean, right? Like you're willing to take on problems that other people don't want to take on in order to get that deal.
The dirty work.
That's it. Yeah, that's exactly it. So, okay, we got another one from YouTube. I'll get to the TikTok ones in a minute. Thank you guys for sticking around. Okay, so Push Pinder Man says, are there a lot of buildable lots available in Windsor? Any things to consider if someone was to purchase, like floodplain, earthquake, permit timelines? I don't think earthquakes are an issue in Windsor, but so buildable lots. So do you have any thoughts on the buildable lots in Windsor thing?
Plenty.
Okay, there we go.
So yeah, there's going to be two different types of land you can look at. You can have to look at infill lots, which is inside the city where someone had a double lot and they just didn't build on the lot beside it. Those are infill lots. And then there's going to be developer lots or subdivision lots where someone took a piece of farmland, developed the whole thing into subdivision lots for brand new subdivisions. You can have to buy those lots from the developer specifically. So I'm going to just dive into infill lots. They're a little more, I guess, to them. The one thing I really like about infill lots is that there's usually development exempt charges. So in the city of Windsor, for example, you can go to the website and kind of see areas where there's no development fees. So funny enough, the permit I just got approved for, I submitted the permit to build a triplex on it. And I came back and then it's like, okay, you permit process, you now owe us $42,000. And I was like, wow, that is a lot of money. And I went through the bill and it said development fees, $35,000.
Oh my God.
And I was like, this is a development exempt area. Called the city, got the bill back, and it was like $6,000.
Wow. So
infill lots, I love them. Development fees are really low. You do have to pay for sewer and sanitary, which means you have to, there's 3 contractors in the city that actually have the contracts to pull city sewer and sanitary to the lot. That's going to cost you about $25,000 on average to get these services to the lot. And yeah, from there you can go start building. So that's infill lots, and then subdivision lots. They usually take care of all that for you. They still development fees going to be a lot. I know in Southwood Lakes, just a high end area of Windsor, it's about like 60 to 80 grand, I think, for the development fees. And it's not in the development exempt area; it's in a nicer area, so you pay more.
Oh my God.
So that's kind of where the two kind of range.
And we're wondering why we're not having as much development. We're charging builders 60 grand to build a house.
Yeah, so you go pay 300 grand for a subdivision lot, and then
Right.
pay 80 grand. So you're like around 400 grand all in before you start building that house.
Right.
It's insane.
Awesome.
Yeah. My sister recently got a new house. She was first planning to like build that house. I think this was only like probably about 6 months ago. Nice 3,500 square feet house. Like she was willing to put money in it too, but the amount that they quoted her was $1.1 million for that. Just the builder. And I feel like that's what, like, you get it built and then you kind of put it on the market for that much over here in Windsor at least, right?
Yeah.
But if the builder's like asking you to pay that much, it's like, okay.
And the tough thing with building too is like, I'm sure there's gonna be delays. People push it out.
Exactly.
Builders say, hey, lumber was $4 when I quoted you, and now it's $8, and now you have to raise the prices. It's interesting. I actually have one client. He had a $1.2 million budget, which is in Windsor. You can get a crazy house for $1.2 million.
Exactly, right?
So he was coming down and he wanted to like, Clark, let's look at New Dev. And I was like, do you want to live in a house, next month or in a year and a half? So I think that's another big thing to consider with New Dev, which is, like you build the house and then sell it versus kind of go through that construction phase. So a lot of options to consider with New Dev.
Absolutely. That's a very, very good input there. Okay, so let's take a look at some questions over here. I hope that kind of answers your question there, Mr. Mann. So let's see.
I forgot what the question was.
I know, it was like, are there buildable lots in Windsor? I know, we just like get into it and we forget, right?
Something about land.
Right, something about land, right? So
Something about real estate.
okay, let's see. Okay, so we got some questions here. David is a mortgage broker. Hello, welcome to live. You're welcome, Shields. Okay, so we answered that. Might want to flip this one too. Let me see. Scotiabank seems best for mortgages. Bought a nice property in Woodsley 2 years ago after flipping a property in Woodstock we built. Very good. All right, we got some investors here. Very nice. Some mortgage brokers.
All those TikTok investors.
I know, all those TikTok investors. Everybody, like, they don't believe me when I say that there's like adults on TikTok, right? It's like
Those are burner accounts.
I know. They're funny. Very funny, guys. Okay, let's take a look at YouTube here because it looks like there's a lot of comments. Okay, here we go. So from Rocky, how would you do a BURR with a 5% down payment? Okay, who do I guess I can give some insights on this as well. So with the refinance, you can pull out 80% of the property's value. So if you buy it for 5% down and then the property's value goes up substantially after that, either through forced appreciation like renovations or through natural appreciation, which we've seen in Windsor, which has been crazy, you can still like refinance a property even though you only have 5% down. But you're gonna have to like look for properties that need a lot of renos, and then kind of find that appreciation potential there, right? So do you have any thoughts on that as well?
Yeah, I think it's hard to BURR with the 5% down.
Yeah.
Well, my one client did actually. It was a young couple. So they had enough cash and enough debt capacity where they did 5% on a like more expensive property they were going to move into, and then they bought another property they wanted to BURR that was much cheaper property for 20%. So they looked at the cash, looked at the debt capacity they had, and that's the route they went down because they wanted to do a BURR, but they had aspirations for kind of more properties in the future. So I was like, if you guys can, let's do 5% down on one and then 20% on another, and then BURR that 20% one, and then have the best cash on cash for that 5%. Is what I recommend to them. Your situation may be different, but in my opinion, it's hard to BURR with a 5% down. It's kind of not possible.
That is definitely true. If you're looking at BURRing with 5%, it is going to be hard to get that sort of appreciation where you can pull out 80% of only 80% of the value. Like it's going to have to go up like 140% or something.
And then you lose like the whole cool thing of doing the 5% down. You get that once every. The exact rules change, but you don't get that often. And the fact you want to use that on a BURR, you kind of squash that to a 20% down after.
Right. How dare you? How dare you ask that?
No, I'm just saying it's difficult. In my opinion, it is. It is.
You're right. It is difficult. If it were possible, you'd have to like get a crazy deal and then I don't know, find a way to really bring up the value. But very, very good input. Anything to add, Gary, on this?
No, I'd agree with that.
All right.
Much.
Sounds good. Okay. Let me see what we got here. So, okay, I'm gonna catch up on these questions from TikTok here. Okay. Armania, he says, ask Clark to call me after this for the multiplex.
You got my number.
Thank you. Thank you for joining us, Armania. I told him he will. Okay. Oh gosh. Okay. We got a lot of questions. Let me just give me one moment here to keep up. How do you usually screen your tenants? What do you look at? Okay. So I'll give an answer on this one here. So credit score, income, employment, the major things here, right? And then you got little tricks where you can take a peek inside their car to see how clean it is, and maybe they'll keep your rental clean, right? And then, when you call their employer, instead of saying, hey, I'm looking to get a reference from this person, you can say I'm looking to get a job. And if they have no idea what you're talking about, they're not an employer, or when you call, right? So little tricks, right? And I've caught a couple people faking that. I did the same thing with landlord references, and I'll call them. It's hey, do you have any units for rent? And if they're a landlord, they'll be hey, how did you find out about this? Or no, I don't have any units for rent. They're not. They have no idea. So people put their family members down. So that's a few things I do. But the main thing, credit score, which I always check myself, income, make sure it's right for the unit. I've never had issues with my tenants so far, luckily, because of good screening. So those are the main things. Do you have anything to add there, Clark?
I think the website Neighborly, is that it?
I've never heard of that one, actually.
It's a really cool Canadian website. When I ran the property management company, they were just starting. They reached out to me for a free trial. But essentially, it's this AI software where it does credit scores, but then also scrapes the web for their social media profiles, their Facebook profiles, their Instagram.
That is such a good tip. And I didn't even know about this.
Yeah, so when I ran the property management company, I was just running this on myself. I'm this is crazy.
What?
It's Canadian only, based out of Toronto startup. And you put someone's name in there, and then they give you a credit score rating, they give you a social awareness rating, combine it, and then give you an average rating on what they, deem it worthiness of renting out. Based off the income, they'll do ratios off the rent and be okay, it's 33% of the income. We recommend, X percent. it's pretty cool. I do like the software.
That is awesome. That's very good.
Social
I
media
learned.
one is pretty,
Right.
pretty up there.
They actually like take a look through their social media. That's awesome. I actually like when I was looking through their social, I went to their socials myself. Just Facebook stalk them, right?
It's just a partying all of them, just partying. Okay.
They got some drug deals going on. Yeah, that's very good. Thank you. So Neighborly.
I have to double check. I'm like 90% sure that's what it's called. Yeah.
Okay. Yeah. So check that out, guys. I hope that answers your question, Starlight. Oh, thank you. You were there for my live yesterday too. Thank you for joining us again, Starlight. Okay. So let's see. Icons, they're trying to keep the small investors out. Oh, there's still opportunities. There's still opportunities in Windsor, Icons. Okay, hello, Emmy. Thank you for joining us. Okay, so Jorthan, he asked for down payment again, wondering if anyone has done this. So I would use it to pay off debt quicker, get rid of the secure line, and then I use my equity, but also ties up my equity in the current property. Get secure line of credit, pay it off, get rid of it, then use equity to buy the next property. Okay. So could you use a secure line of credit to get a property, like for a down payment? Because I haven't heard of this. Have you heard of any situation?
I would double check the mortgage broker on that one.
Yeah. Because I feel like I don't know if they would let you use that for like a down payment. Because I'm guessing what you want to do is use it as a down payment and then pay it off with a refinance, which is going to be very difficult again because you need a pretty big line of credit, right, to get some equity in that property and then pull like 80% of the value out. That is quite. It's creative, but it's quite a stretch, So
my thought is you can't fool anyone.
Right.
If you're trying to pull one over on a mortgage broker, you're gonna get caught.
Right.
Ask them the question; they would know that better.
Yeah, I would say go to a mortgage broker and ask. I haven't heard of anybody doing that before though. Okay, so Saul says, what would you do? Save 20% for a down payment or an ADU on detached garage, Leamington. So I'm guessing you're asking, would you save 20% on a down payment for another property or get an 80 or like put an ADU on your current property? So again, like that depends on the situation. Like how much rent can you get from that ADU? How much money are you putting into the ADU? Or could you get like another property that pays more than that ADU could pay, right? With that down payment. So that's going to depend on like what property you get, how much rent you're getting from the ADU, how much it's going to cost to build the ADU. If you do decide on the ADU, Clark though, he's the tiny home guy right here.
Unfortunately, Leamington does not have the bylaws yet. When they do, you can. So I guess that answers the question.
Very good. I didn't know.
There you
go. Yeah. So it looks like so it's not even a
it's
possibility
pretty much
yet.
Windsor, right?
Windsor and Amherstburg are the only areas.
Windsor and Amherstburg,
Gotcha.
Yeah.
So that kind of answers your question for now, if you wanted to. Yeah, there you go. Very good.
Might as well just get a new house, buddy.
Just get a new house. Yeah, Gary says just get a new house. Okay, let's.
Easy and simple. That's it.
Just buy a new house.
Yeah,
no
just
problem.
no problem. Not like you need money.
Yeah, that is kind of the that's cool that you have the option though, right?
Right.
Because you can look at let's say there were bylaws in place for you to do that now. You could always look at it and like you said, run the financial model. Does it make sense to invest in my current property or 20% down on a different property? Which one makes more sense?
Right.
And if it makes more sense for the additional property, 4 years later, you have money, you want to do it again, run the same numbers. When the market keeps going up, now does it make sense to do 20% down another property or invest in your current property? It's cool. You have the option to run the numbers and pick the best one.
Let's say if he was living in Windsor, what would you recommend him though?
Same thing. I'd run the numbers. Be like, how much money does it cost to build a tiny home? How much equity do you have in your house? Where are you pulling the money? What's the debt in return for that? Run the same thing on purchasing another property. For me, returns on tiny homes are pretty insane.
Yeah, they are.
So, but it makes sense for everyone, right? If his situation is a little bit different, just run the numbers and see what works.
Right. Absolutely. Yeah. If you ever need a tiny home guide, get to Clark. If you need a real estate calculator, call me. I've got a really good one. I give it out for free. So for now.
You're just gonna put a little trademark at the bottom slowly, right?
All right, let's see. Okay, we got okay, let me see where we're at here. Okay, I'm gonna go to YouTube over here. I hope that kind of answers your guys' questions on TikTok there. If you have any more questions, put them down. We'll try to get to them. Okay, so from Red Arrow, from YouTube, should buyers start considering electric vehicle charging accessibility, i.e. garage versus no garage? That's a unique question there. I've honestly like never even considered like vehicle charging to be.
So on the property on Drouillard that we're looking to build, we're still debating if we need parking or not. But if we do need parking, we're putting electrical chargings there.
Okay.
Just because if it's a ground up development, so we have the money, we can kind of look at doing that. And do we think in 5 to 10 years it'll be more common? For sure. So I thought, yeah, we'll have the money. It's not that much of a change to invest in now. So if we can, we will. Is it going to make or break your rental? No. But it would be a cool thing to add. It's like, it's like any other kind of amenity that sets yours apart from someone else. Like if someone has an electric car, they need that charging station. Your rental becomes that much more valuable than everyone else out there.
Absolutely. Well, you know what? It might be make or break in like 10 years or so, because aren't they like banning making gas vehicles like in 2035, yeah. So it may make or break it like in the future, and you're already prepared for that.
Yeah.
And
that's actually a pretty good point that you brought that up. Yeah.
Very good, Clark, for you to do that. Dang, like I never even like considered that. So that's very
especially because like you're already building there, so like might as well put it there now instead of like having to rip apart everything and then go with electrical lines and everything then, right? So yeah, it makes good sense.
Right.
It's actually pretty smart of you.
Yeah, that's a great question, Red Arrow. So, so should buyers start considering it?
How much was it for like starting off scratch, just putting car chargers in your property?
Oh, I have no clue.
Because
I know like extension, like after your garage is already set up in there, like it could go like $10,000 to $50,000 just for like having the new panel, like new everything over there. Because I think you need a sub panel for that separately. So yeah.
Yeah, so it definitely can be a consideration, I think, what we got from all this. So yeah, something to think about for sure. Let me take a look at what we got on TikTok here. Okay. Well, it's really useful info. Thanks, guys. Starlight says you're welcome. Okay, so you're welcome, Saul. Okay, so Nishan says I have 40K and I'm 21. What can I do to start in real estate? Gosh, that is such a loaded question, because there's so many things you can do in real estate, right? So if you want something cheaper, look into REITs. You can get like a little like a stock of like a portion of real estate in REITs for as little as $100 there. Or you could put a down payment on a place in Windsor, probably. I don't know what you could do with 40K, but
40K, 5% down. Would that be 800? No,
we're way off. I think that's 400. I think you got to cut that in half.
Well,
I don't have the brain power right now to do that. They're probably like, how do they not know 5%? Okay, 5 times 4. That's like 20. Oh, you're right. It is 800.
Yeah. I thought it was 800.
Yeah, you're right. I'm wrong.
Yeah, 0.05.
Yeah, you're absolutely right.
Yeah,
it is.
so a lot of things. You can do a lot of things with 40 grand and put 5% down. I'd probably recommend house hacking. You can get lots of duplexes for half your max budget. Put a mortgage agent, see what you're pre-approved for. No, you can do 5% down. Keep in mind lawyer fees and I guess land transfer tax. If this is your first home, you don't pay land transfer tax. So just be lawyer fees. Go to a bank, get a pre-approval, and start house hacking. Best way to manage monthly expenses and start building wealth.
Absolutely. Very, very good. You got any insight, Gary?
No, I agree with that. Pretty much 5%. You're a lot, like you have so many other options. Like when you go 5% down too, like you save a lot of money that way. But yeah, house hacking is the way to go. A lot of my clients right now are little 5% down on my house hack. It's like, okay, that makes my job a lot easier too.
I'm literally house hacking next week.
Oh, there you go.
Yeah.
Awesome.
There you go.
There you go. You heard it from the guy actually.
There
we go. Very good. Okay. House Hacker Clark.
Yeah.
All right. So I hope that answers your question there. You're good. You're 21 with 40K. That's good. I didn't even catch that.
Yeah, no, you're already starting off well. Good
job. Okay. So I'm going to go to YouTube and then I'll come back to TikTok here. So How do you guys think the new government law will affect the flippers and investors? Okay, so from Hafsa, and they say, does the rate of interest go up for an investment property? I'm trying to see how we can word this. I don't know what government law you're talking about here. Yeah.
I know there is an increase in capital gains. I think that's what he's referring to.
Okay.
I forget the exact amount. I know. Yeah, if you hold a house, because there used to be a thing where if you hold a house for a certain period of time, you kind of out of that capital gains are considered personal residence, and you pay personal residence gains instead of not. So I think if that's what he's referring to, flippers are just gonna have to budget for that. They will account for that in their margins and just have to budget accordingly.
Right. Very good. I definitely agree with that. Okay. Yeah. And you're welcome, Red Arrow.
We do have 5 minutes left, so let's just I guess get our last few questions going.
Right.
We can start winding down.
Very good. Okay, so from Hafsa again, any information on mortgages for renovation? So this is something like I'm considering doing right now. I'm looking at like refinancing a property to build a basement unit. So refinancing is definitely an option. I actually have a video coming out soon on your different financing options for renovation. So kind of keep an eye on that, Hafsa. So there's lines of credit. There's credit cards, which I don't recommend. You're at like 20% there.
No,
but
some people do it and it's crazy.
Some people do it. I've seen it.
It's crazy.
Secure line of credit or refinancing is probably your best option.
Or if it's a purchase, you can do purchase plus improvements.
Yes.
One of my most recent clients did that for one of their properties. Pretty sure they got 5% down and then purchase plus improvements.
Yeah.
So it's like the lowest cash into a property you can possibly be.
Absolutely.
And they did that in a walk-up home.
Yeah, that's an option as well. So any other ideas, Gary, for how you can get
pretty much purchase plus is like what most of my clients do too. Like I said, 5% down there, most of them are like that too. So like that helps a lot. A little bit line of credits too, because you can refi later on down the road too.
Absolutely.
So those are the two main ones. Or like families. I mean, a lot of people have good families that are willing to help them out there.
Yeah,
too.
a lot of people have pretty wealthy families. It's
right.
Yeah,
But honestly, it helps. Like if you're an investor, like if you can't go to your own family, it kind of becomes difficult. So like it helps like having your family kind of help you out there, but not everybody has that. So for people who don't have backs like that, like for sure, like
sugar daddies.
Sugar daddy.
No wealthy family, get your own.
Yeah, Gary and I will never see those, but
but purchase plus improvement, secure line of credit, refinancing, sugar daddy. More options there. I hope that answers your question, Hafsa. Okay, let's take a look at TikTok. Just another. I think we got time for one more question here.
Make it a hard one. Let's go.
Okay, make it a hard one, he says.
5% down on how much you can buy was a hard one for us. So.
Yeah, I know. We were like really trying to figure out the math there.
I had to pull out the calculator for that just in case.
So Sinkar says, I recently bought my first home. Any suggestions for getting a second home in a year or two? If you're talking about like a second property to rent out, do you got any suggestions on that, Clark?
I would be, just set goals. What kind of property do you want to go for? Where does it want to be? What's the average price you're going to be looking at for that home? And then how much money do you need? That's the way I run most my properties or investments. How much cash do I need? Is kind of the way to go about it. Say, how much cash do I need upon purchase? How much cash do I need for the next, 6 months, year? Best, worst, medium case scenarios. And then when you feel like you fulfilled the goals for those scenarios, just end up pull the trigger. Yeah,
I agree. You know what? Another thing, if you have a house, again, basement unit or an ADU might be a possibility as well. Like a mortgage broker will take the rents you get from your other properties into account to qualify you for the next one. That's what they did with my sixplex. So if you have some rents coming in, that can help you get that second property. So that's another thing to consider as well. That's a great question. You're welcome, Red Arrow and Hafsa. Thank you guys for joining us. Sorry, we don't got any more time for questions, but we'll be here next Thursday at 7 p.m. We'll be doing this every Thursday at 7 p.m. So make sure to join us on TikTok and Aditya Soma's YouTube channel and his Facebook Live. So we'll be on all 3 of these platforms, and I'm gonna try to get it up on my YouTube as well. So we got a lot of questions today. Thank you guys for participating. These were really, really good questions.
Yeah, and if you ever want to, look in the Windsor market, you're thinking about investing, thinking about buying, check out the Win City Real Estate team. Check our YouTube channel. We got tons and tons of content out there. So feel free to check out there. And when you want to make the move and start looking at properties, feel free to check our page and give us a call.
Absolutely. Okay.
Nailed it.
Yep. info@wincity.re.com for the email. Reach out to us. Okay, guys.
Awesome.
All right. Awesome. See you
Thank you
next
so much.
week.
Bye, guys.
Bye.